Just think about it. The smartphone in your hand, the electrical systems in your car, the solar panels on your roof, the X-ray machines in hospitals. They all share one common secret. And right now, that secret is quietly brewing a massive storm in the global markets. That secret is silver. For decades, silver has been content to stay in gold's shadow. But in recent months, it has made a move that has left even the most seasoned analysts in awe. So, is this rally the real deal? Or is it a sophisticated trap set by the big institutional players? And most importantly, how will these market conditions affect you? I spent years as a stockbroker. Managing portfolios for the top 1% in the world of private wealth management taught me one thing. Big money moves long before it hits the headlines. Today, I'm going to show you where that big money is flowing, why it's moving, and what it means for your pocket. Using hard numbers, charts, and zero fluff. The unusual supply structure of silver. Let's start with a critical fact that most people don't know, but absolutely should. Roughly 75% of the world's silver is not mined as primary silver. Let me repeat that. 3/4 of the silver entering the market is actually a byproduct of mining other metals. When companies dig for lead, zinc, copper, or gold, silver just happens to come along for the ride. Think of it like a restaurant. Customers come in for the roast turkey, but the kitchen also produces turkey stock as a byproduct. Now, imagine the global demand for turkey stock suddenly skyrockets. The restaurant can't just produce more stock because their capacity is tied strictly to the demand for the turkey. This is exactly how silver works. Even if industrial demand for silver explodes, miners can't just say, "Let's dig up more silver." Silver production is tethered to the demand for copper or zinc. This structure reduces supply elasticity to nearly zero. What happens when demand surges while supply remains stagnant? Prices go vertical. History has proven this time and again. During the Hunt brothers crisis of 1979 to 1980, silver jumped from $6 to $50. It hit $50 again in 2011. Every time the market said, "It can't go any higher." Every time it did, and the market was wrong. What's happening on the demand side? We understand the supply. Now let's look at where the demand is shifting. Thanks to technological leaps, the industrial use of silver is reaching unprecedented levels. According to the Silver Institute, global industrial demand hit roughly 632 million ounces in 2023, hovering near record highs. Every single solar panel contains about 20 grams of silver. With over 300 million panels produced annually, this sector alone represents a massive demand sink. Electric vehicles, or EVs, are another titan of demand. Unlike traditional internal combustion engines, EVs require far more electronic touchpoints and conduction systems. And every one of those systems requires silver. 5G infrastructure, medical devices, semiconductors, military electronics, the list goes on. I need to highlight a crucial point here. Many financial analysts and social media pundits frame silver as just poor man's gold. That is a misconception. Silver has a dual identity. It is both an essential industrial raw material and a store of value. This double-edged nature makes its price dynamics incredibly complex and, frankly, exciting. The global picture: war drums and trade tension. Now, let's look at the tectonic shifts happening globally and how they intersect with silver. Since the start of 2025, geopolitical tensions have tightened their grip on financial markets. The trade war between the US and China has entered a new dimension. With the Donald Trump administration aggressively hiking tariffs on Chinese imports, China has responded with retaliatory measures. This has a direct link to silver that most people are missing. Think about it. A huge portion of the world's processed silver is exported from China. They are the world's largest silver processors and solar panel manufacturers. As trade wars intensify, Western corporations have begun panic buying to secure their silver supply chains. This just-in-case hoarding is putting massive upward pressure on spot prices. Meanwhile, tensions in the Middle East and potential conflict scenarios are driving safe haven demand. Historically, hem gold and silver benefit during these times. But because of silver's supply inelasticity, its price reaction tends to be much more violent. The energy uncertainty from the Russia-Ukraine conflict is also accelerating Europe's transition to solar power to ensure energy independence. Again, this feeds directly back into silver demand. Ask yourself, how many times have you seen this context in the mainstream media? Probably never. The media sells panic with headlines like crashing or to the moon, because clicks matter more than context. But real wealth is built on contextual understanding, not sensationalism, manipulation, or market reality. I couldn't skip this question. To be honest, most analysts are at extreme ends of the spectrum on this. On one side, you have conspiracy theorists claiming the silver market is entirely rigged and that big banks are artificially suppressing prices. On the other, you have the naive optimists claiming the market is perfectly efficient and fair. The truth, as always, lies somewhere in the middle. Look at the volume of silver contracts on the COMEX. Compared to physical delivery, the amount of paper silver traded is astronomical. Some estimates suggest there are 100 to 250 paper contracts in circulation for every physical ounce of silver. This structure can decouple short-term price action from physical supply and demand realities. Remember the Wall Street bets silver squeeze in 2021? Reddit users piled in, creating a short-term rally, only for institutional short positions to hammer the price back down. This ignited a debate. Is it manipulation or just market mechanics? The answer is both. Markets are shaped by both natural forces and the influence of major players. You cannot take a winning position without accepting this dual reality. In my years as a broker, my wealthiest clients never asked, "Is the system fair?" They asked, "How do I win under these conditions?" That mental shift is what separates the average investor from the elite. What do the data points say? Let's put the hard data on the table. According to the Silver Institute's 2024 report, global demand has exceeded supply for 4 consecutive years. These types of structural deficits eventually, inevitably, reflect in the price. According to the U.S. Geological Survey, the USGS, proven global silver reserves are approximately 550,000 tons. At current extraction rates, these reserves will last only about 20 to 25 years. And there are no massive new discoveries on the horizon to extend that timeline. We also have to look at the Federal Reserve. High interest rates usually suppress silver because it's a non-yielding asset. However, as the Fed signals potential rate cuts in late 2025 and 2026, the environment is shifting. A weaker dollar provides the perfect tailwind for commodity prices. Furthermore, independent analyses suggest that real inflation is significantly higher than official BLS figures. Whether you agree with that or not, one thing is certain. Whenever inflation is persistent, the appetite for physical commodities as a store of value increases. And let's debunk a myth. Silver isn't just industrial. While roughly 40 to 50% goes to industry, the rest is tied to jewelry, silver coins, bullion, and photography. Investment demand is rising sharply. The contrarian view. Staying cool while others panic. Look at the markets right now. What do you see? One camp is shouting that silver is a bubble about to burst. The other is running a speculation race, claiming silver to $100. Both are emotional reactions, and emotional reactions lose money. When we look at inflation-adjusted historical data, silver's real value is still well below its 1980 peak. That $50 price tag in 1980, when adjusted for today's purchasing power, would be equivalent to $180 or $200. This means that calling silver a bubble when it hasn't even tested its historical peak in real terms isn't a data-driven analysis. It's just fear. Conversely, the buy now it's going to $100 crowd is also dangerous. Short-term price predictions in a market with such high volatility and speculative positioning are unreliable at best. Entering any market during a hype cycle is historically the worst time to buy. So, what's the right approach? Define your own financial situation, risk tolerance, and time horizon. Silver makes sense as a diversifier and a form of insurance in a long-term portfolio. It shouldn't be your entire strategy. Enter based on data, not on FOMO or panic. Even if the system is rigged, I'm going to be very honest with you. Yes, the system isn't perfect. Yes, the big players have an edge. Yes, paper markets often disconnect from physical reality. And yes, geopolitical events are largely out of our control. But here is the truth. Blaming the system for being unfair might be an excuse, but it's never a solution. The wealthiest clients I managed weren't the ones who understood the system best. They were the ones who accepted the system as it is and identified their own advantages within it. If you're waiting for a fair and perfect environment to invest, I have news for you. It's never coming. Inaction is often the most expensive choice you can make. To anyone researching the silver market, I say this: educate yourself first. Then take small steps. You will make mistakes. That's unavoidable. But those mistakes will be far more valuable lessons than the cost of doing nothing. No one is going to hand you financial freedom. You have to take it. And that journey begins by asking the right questions today. Silver is a fascinating asset. Supply constrained due to its 75% byproduct nature, driven by the technologies of the digital age, triggered by geopolitical safe haven demand, and clouded by transparency issues in paper markets. This picture doesn't guarantee a miracle, nor does it guarantee a disaster. But I can tell you one thing for sure. Making a move without understanding this landscape is a blind gamble. Making a move after you understand it is an informed choice. And making informed choices is the very first and most important step on the road to financial independence. If you found this video helpful, don't forget to subscribe to the channel. Let me know in the comments which topic you'd like me to tackle next. I'll see you in the next video.